Module 2, Understanding Businesses, not Stocks. If you don't understand the business, don't buy the stock. Module Outcome. By the end of this module, students will understand that stocks represent ownership in real businesses. Know what separates a great business from an average one. Learn the idea of economic moats using simple examples. Appreciate why boring, stable businesses often outperform. See how these ideas apply through a high-level case study. Core transformation. Students stop watching prices and start understanding businesses. Lesson 1. Stocks as partial ownership of businesses. Key insight. When you buy a stock, you are not buying a ticker symbol. You are buying a small piece of a real business. What ownership means? As a shareholder, you own part of the company's assets, benefit from its profits, share in its long-term success or failure. Common beginner mistake. Many people treat stocks like betting slips, trading cards, prize games. Correct mindset. If you wouldn't be happy owning the whole business, you shouldn't own the stock. Reflection question. Would you still want to own this business if the stock market closed for 10 years? Buying a stock is buying a piece of a business, not a piece of paper. Munger. Lesson 2. What makes a great business? Not all businesses are created equal. Characteristics of a great business. A great business usually has consistent demand for its product or services, strong brand recognition, pricing power, ability to raise prices without losing customers, reliable cash flow, simple, understandable operations. What great businesses avoid? Constant reinvention just to survive, heavy dependence on trends, extremely complex models. Great businesses are often predictable, not exciting. The best businesses make a lot of money and are easy to understand. Warren Buffett. Lesson 3. Economic moats, simple examples. What is an economic moat? An economic moat is a long-lasting advantage that protects a business from competitors. Think of it like a castle moat, it makes the business harder to attack. Simple examples of moats. Brand moat, people choose the brand automatically. Cost moat, company can produce cheaper than others. Switching cost, customers don't want to change. Network effect, product becomes more valuable as more people use it. Everyday example. A trusted household brand can raise prices slightly without losing customers, that's a moat. A truly great business must have an enduring moat. Warren Buffett. Lesson 4. Why boring businesses often win. The counterintuitive truth. The stock market rewards consistency, durability, reliability, more than excitement, innovation hype, constant change. Why boring businesses perform well? They generate steady cash flow. They survive economic downturns. They compound returns quietly over time. Exciting stories attract attention. Boring businesses build wealth. Student exercise. List 3 boring businesses you interact with weekly. You don't want a lot of excitement in investing. Munger. Lesson 5, case study, high level. Coca-Cola and Candies. Illustrative examples, not investment advice. Why these businesses stand out? At a high level, these businesses demonstrate powerful brands, loyal customers, simple products, long-term consistency. Coca-Cola, high level, sells a simple, repeat purchase product. Strong global brand recognition. Customers return regardless of economic cycles. Candies, high level, simple product, loyal customers, strong pricing power, high returns on invested capital. Key lesson. These businesses succeed not because they are exciting, but because they are understandable, durable, and trusted. Time is the friend of the wonderful business. Warren Buffett. Module summary. Key takeaways. Stocks represent real business ownership. Great businesses are simple and predictable. Economic moats protect long-term profits. Boring businesses often outperform flashy ones. Understanding the business comes before buying the stock. Module assignment. Think like a business owner exercise. Answer in writing. 1. What product or services do you regularly use without thinking twice? 2. Which businesses do you trust and why? 3. Do these businesses have any moats? Explain simply. Module completion statement. You are no longer investing in symbols. You are learning to invest in real businesses.